We recently did a piece on IRA retirement accounts, which looked at how young investors, 30% believe that crypto offers them one of the greatest opportunities to grow wealth, and that's potentially problematic. That's because the crypto space is littered with a fair number of scammers. Not to mention, there's really no difference between a scammer and somebody who's just blatantly incompetent. The outcome's still the same, and you lose your money. So whilst money continues to pour into both crypto and crapto, we're left wondering if there's any there. So when we consider assets, crypto assets, the original concept of an ICO was an absolute joke because you didn't have any equity in the underlying business. They were just coupons to spend on a platform that hadn't been built. Equity crowdfunding in itself is an extremely bad idea. Now, today we see more legitimacy around crypto with Bitcoin ETFs, but that's just some legitimacy because there's over 11,000 crypto assets out there. So the question that we want to ask today, have we passed the trough of disillusionment when it comes to crypto? And this is what Gartner produces, and it shows where a technology gets hyped, and they say here, generative AI is up there. And if you read the legend, it says, well, this is a 2 to 5 year estimate. So eventually we would expect all the hype around generative AI to subside, the trough of disillusionment, and then the slope of enlightenment is where we actually start to see traction. The question is, for crypto and blockchain technologies, how are we creeping up slowly the slope of enlightenment? And today's asset we're going to look at is a stock. It's called Coinbase, and we believe it's one of the safest ways to play crypto because it benefits regardless of where we are in the hype cycle. Now, clearly, Coinbase is going to benefit more when crypto is seeing more hype. And this is a great picture here because it shows the performance of Coinbase since their IPO. So you'll notice our thumb slide said 356% return in 1 year. Sure, that's great. It sounds good on paper, right? But then when you look at the bigger picture, it's not so great. So since Coinbase's IPO, they're down 35%, whilst you can see they're tracked against Bitcoin here, which over that same time frame is up just 14%. So I think peaks and valleys are great opportunities to torture the data and make it say whatever you want. But the last time we looked at Coinbase was 2 years ago, and we said that it remains one of the most promising pick and shovel plays on crypto, but we weren't going to cover the stock until they could diversify revenues away from retail investor exposure. And we noted that today's crypto quote-unquote investor, most of them are speculators, are being driven by emotion and get-rich-quick-at-all-costs mentalities. And the real question there was, once these individuals blow through all their cash and hand it over to somebody else, how many are going to stick around? And you could argue, well, there's always going to be enough sheep to fleece, right? And when we look at the real reason that we weren't interested in Coinbase, their high reliance on retail transaction fees. This is a great chart that shows how retail has moved from being somewhere upwards of 88% retail transaction revenues of Coinbase's revenues when we looked several years ago to, in 2023, down 40 to 46%. So they were able to successfully diversify revenue streams, though that's risen last quarter, and you can see the last quarter bump here. That's what all the excitement is about. And this chart here from Coinbase shows us how the market cap of crypto has risen almost to all-time highs there, it appears. And to put that number in perspective, that's about $2.8 trillion in crypto market capitalization, or about the size of the Canadian Stock Exchange. You also see volatility is spiking, and that volatility translates to Coinbase revenue volatility. See, in 2021, that's the last time we looked, and they had close to $8 billion in revenues. Well, look how dramatically that fell off a cliff. So just upwards of $3 billion in 2022, and slightly less than that in 2023. But again, we see this pop in their most recent quarter. They were speculating in their report to say, well, one of the reasons is the Bitcoin ETFs that have driven a lot of interest, and no doubt that's part of the reason for sure. Now, when we originally looked several years ago at transaction fees. Here you can see that they accounted for 88% of total revenues in 2021, and they've plummeted since then. And the most important thing to note here would be that they successfully diversified away from transaction revenues. In blue, those are transaction revenues, and purple is other bits. Now, the question to ask here is this going to lead to less revenue volatility? Well, not if these segments are highly correlated, and they certainly seem to be correlated. When we look at 2023, the full year results for Coinbase, you see, as I said, 46% of revenues attributed to retail transactions. That's much better. And then we have something called stable coin revenue, and that's new. We hadn't seen that before. So that actually reflects a investment that Coinbase made in a firm called Circle. And it says here, this is an article from 2023, Coinbase is relying upon this USDC revenue because its transaction-based revenue remains depressed, while a portion of the company's staking-related revenue is at risk due to the regulatory action of 10 states. And that's something we'll talk about in a second. But when we look at the latest quarter, look how consumer transactions are no longer depressed. They've jumped 99%. Institutional transactions are a smaller, much smaller percentage of total transaction revenue, but those jumped 130%. That means transaction revenue last quarter for Coinbase jumped 100%. Net revenue jumped 75%. Let's say this was calculated incorrectly. So the number that we actually want to look at is subscription and services revenue. So you can see how that's jumped, certainly not as dramatically as transaction. And we see total revenue is up 72%. So the company is definitely seeing a resurgence in interest from investors around crypto. And one thing to note when you read through the reports and whatnot, they're very well put together, but they have this diagram here about Coinbase and the SEC litigation stages. This is never a good thing. So I know that it's a necessary evil, and it paves the way towards crypto seeing wider adoption, but it creates more volatility because this is external regulatory risk. So once this clears up, then you would expect there to be less volatility. Now, with volatility comes dramatic movements in valuation, and we see some of that here. We've calculated Coinbase's simple valuation ratio, so the SVR. This is market cap divided by annualized revenues, and you can see how it's been increasing sharply along with all the crypto hype, and the average there of around 8. So if you're interested in going long Coinbase, you'd want to set a SVR target and then go long once an appropriate valuation has been released. We'll always see waves of hype, peaks and valleys, as we pointed out earlier. Now, I wanted to take a quick moment. Some of you were asking where I'm at right now. Well, for those of you that are outside the United States, half our audience, there's 2 Washingtons in the United States. One is the Washington, D.C., and one is Washington on the West Coast, the latter being a much more desirable place to visit. I'm at a location in Washington called Mount Adams. Right behind me there you can see my Starlink that's cranking away, and that allows me to work practically anywhere. And now that we're showing video, I guess the cat's out of the bag. I do these videos from everywhere on this planet, some very unique locations. So this time it's Mount Adams, and I'm up here doing a bit of biking, mushroom hunting, and fishing when I'm not working on Nanalyze. So why doesn't Nanalyze cover crypto? This is a question that we get asked a fair amount, I suppose, from younger investors. And the answer to that is we don't believe, going back to the points made earlier about crypto and crapto, that there's enough legitimacy to merit a focus, and that would be simply a vertical within our organization. So we have 2 verticals right now: disruptive tech investing, dividend growth investing, and this would be a 3rd vertical. Another interesting vertical would be China. Now, if you were going to cover crypto, the first thing you'd want to look at is how can you avoid all the crapto? How can you keep people from being scammed? The problem is that the trilemma has wreaked havoc, and this simply shows here in this diagram. Pick 2. You never get all 3, and you can pause it, and it's very intuitive how that works, right? Now, what we can do then is look to institutional investors who are now getting involved so that they may provide guidance. But no head in the clouds VC mumbo jumbo. We see a lot of that. No newly minted crypto investing firms. We saw how many of those exploded. Look to experienced finance professionals who are looking for some there, and definitely no FOMO stuff. And none of this, you just don't understand the magic of democratized finance bullshit, because that's if you can't explain something simply, then you truly don't understand it yourself. So people live busy lives. We don't have the time to nerd out on white papers like the fortunate people who work on these projects and can truly understand them. But the question to ask, what are the most promising crypto coins? I guess that's what we're calling them these days. Well, Coinbase lists over 11,000. If we look at the leaders, we see, of course, Bitcoin and Ethereum. Tether, that has to be one of the worst things I've ever seen in my life. And you can read a post that we did on this topic looking at that shady organization. I can't believe that it still lives up there. BNB, we're not familiar with. You have Solana, USDC, so that's where Coinbase is making a lot of that money from, their new revenue stream we mentioned earlier. Dogecoin, which started out as a joke. So nothing overly compelling on the top names here. And I think it's a matter of, for now, continuing to watch the space. When it comes to Coinbase, they've successfully diversified revenue, so I think it makes sense to examine the revenue streams a bit more. We're inclined really to move this from an avoid in our tech stock catalog to a like. Crypto and crapto aren't going anywhere. Eventually, we're going to have some there, and it's going to be obvious and accessible, but Coinbase wins as long as punters keep playing the game. Now, the coming election, that's going to create more volatility, and removing that regulatory risk, which is what Coinbase is battling. That's very important. The trilemma and the amount of scammy bullshit out there, it really continues to be very concerning. We won't be covering crypto as an asset class anytime soon, though we may do some more exploratory pieces on this topic. Now, I'm going to go ahead and leave you with another video here on Bitcoin ETFs, which is quite good if you're looking for some exposure there. We have some Bitcoin exposure. We hold it at Coinbase. So please subscribe to our channel. Sign up for our newsletter in the comments section. Thanks so much for taking the time to watch this today.